Welcome. It's January 2022, and I want to take you on a journey to invest your savings in the stock market and watch them grow. I'm going to show you two lists of blue chip stocks. One's on the Toronto Stock Exchange, the TSX, and the other is on the US stock exchanges, the New York Stock Exchange and the Nasdaq. I actually own each of the stocks shown. I'm Canadian and I have invested in blue chip stocks since 1983. I started with a little over $20,000 and I have grown this by an amazing 7,300% in 39 years. You heard that right, 7,300%. I've added cash savings every year of my life. Some years I added a little less, like when I was a stay-at-home mother for 12 years raising kids, then when I was lower on the totem pole going back into the workforce, and also being between jobs at times. Other years, I was able to be more aggressive with my saving. My kids were living on their own, and my job provided a great savings and pension plan. The goal is to always take 10% off each pay and put it aside to save. I pay attention to my portfolio at least once a month. I track current pricing and update my spreadsheet. I let my stocks ride. I buy more with savings and dividends, and I rarely sell. We're going to follow one listing of Canadian stocks listed on the TSX and one listing of US stocks listed on the New York Stock Exchange and the Nasdaq. I will update prices weekly and you can see how they grow. We're also going to follow 4 fantasy portfolios on the Canadian exchange. One for $5,000, one for $10,000, one for $25,000, and one for $100,000. Each portfolio will also show the dividend payout so you can see how the stock market pays you. Things to remember: the prices on the stock market will go up and down with the economy and world events. With blue chip stocks, the dividends are fairly secure. They will pay out at the same rate no matter the value of the stock. Dividends can be used to buy more stock. Dividing your money evenly into each of the 5 sectors shown will create a stable portfolio. When one commodity goes down, others tend to go up. Just as a disclaimer, I just want to let you know this is for information purposes only, and I don't take any responsibility for any gains or losses you experience in the market. But feel free to use this information to create your own stock portfolio. So what we're going to look at here is I have set up 2 listings of blue chip stocks. These are all strong Canadian companies that for most part pay a dividend. You will see that I have divided my stocks into the 5 sectors. We have manufacturing and industry, consumer goods and services, finance, resources and commodities, and utilities. So I have listed all the stocks under their commodity. I've also shown the stock symbol. This is how you can search it on the exchange. I have shown the dividend payout for each one of these. This is the yearly payout per stock that you own. So if you were to own 100 Canadian national stocks, they would pay $2.46 times 100. That would be your annual payout. So this list here that says 2022, this is going to be the percentage increase in the share price from the beginning of this year. As years go by, I will add the next years in there and you can see the increase as well. This column here is going to be the current price. Then I will record weekly what the price is. So you will see what the price is last week compared to what it is this week, and that is what's going to give you the percentage increase or decrease. Currently, the market took a hit last week, and there was also historical profit sharing taking, which is normal for January. So this actually means with a drop in stock prices, that actually means this is a very, very good time to buy. So we will look at the US listing, and we've got the same sectors, the same 5 sectors: manufacturing, consumer goods, finance, resources and commodities, and utilities. And I have listed all the stocks underneath those commodity banners. The symbol is shown, the annual dividend is shown, the percentage increase or decrease since the beginning of the year. We're only on the second week, and the US stock market experienced the same drop that the Canadian stock market did. However, keep coming back in the next few weeks and you're going to see how this goes up. So we'll take a look at the 4 fantasy portfolios that I have put together, just so that whatever amount of money you have, you can take a look and see how that might grow for you. So I have a $5,000 portfolio where I bought one company underneath each banner of the utility, the commodities. So you see that I bought Canadian Pacific. We have the symbol. I bought 10 shares. The current price is $92.08, so therefore my current value is $920.80. That is a 3% drop from last week. And the only one that this actually did go up just a little bit. It went up, no, it didn't. It went down just a little bit. So we have not that big a drop in the grand scheme of things, only $100 on a $5,000 portfolio. And I can promise you that in the coming weeks, this is going to go up. So the other thing we track here is your dividend income. Each one of these companies that I chose pays out a dividend. So your annual income is going to be the number of shares you own by the annual payout for that company. So for 10 shares, my annual payout is going to be $760. So on a $5,000 portfolio, you will make $185.52 in dividend over the course of the year. That will not change. That dividend payout is relatively stable, and 99% of the time that dividend payout will increase. You'll see how the dividend payout gets bigger as you go up the portfolios. So in a $10,000 portfolio, I bought 2 companies under each banner. So I've got my current price and my current value, and then I recorded my current price and value for the week. So we have some of our companies. Canadian National has gone up, Imperial Oil has gone up, TC Energy has remained just about the same. So that gives us an overall portfolio drop of only 2%, which is not too bad considering what happened on the markets last week. The dividend payout for the $10,000 portfolio is $336.74. So we'll move on to the $25,000 portfolio. In this one, I have bought 4 companies under each banner. I split my money equally between all the banners, and I have my current price and my current value. I recorded last week's current price and value against this week's current price and value. Some of the companies have not done as well as, like Linamar, for example, is down 18%. Linamar is a very, very strong company. It would be a very good idea to get into Linamar right now because this company is expected to rebound quite quickly. So the total value from last week, we spent $24,860 buying our $25,000 portfolio, and it's only down about $100. Excellent, excellent for what happened last week. The dividend payout for the $25,000 portfolio is almost $700 a year. Don't forget, those dividends can be reinvested back into your portfolio to help it grow and make more money. So let's take a look at the $100,000 portfolio. In the $100,000 portfolio, I spread my money among all of the blue chip stocks that I have chosen in the Canadian sector. And keep in mind that my fantasy portfolios are set in Canadian dollars. So you can do the same thing. If you are in the US, you can do the same thing in the US with your US listing. So the $100,000 portfolio We are down overall 4%, which is actually pretty good. We spent $99,981 buying for the $100,000 portfolio, and it's only dropped off to 96,036. This is actually better. It performs better than the overall market in general. So the $100,000 portfolio, once you have $100,000 invested and you're in good dividend paying blue chip stocks, your investment, your annual dividend income will be $2,305. Again, what you want to do is when you get that amount of money coming in, you're going to reinvest it into more stocks and watch it grow. So to watch this grow, join me next week at the same time on Tuesday when I update and I post again, and we'll see how well our stocks are doing. Until then, have a great week, and I will talk to you later.